Markets. We want to bring in another analyst. Another Bloomberg Best, meaning is particularly accurate on Intel estimates, and he is, of course, Doug Freedman of RBC Capital Markets. Doug, we appreciate your joining us. You've had a quick 5-10 minutes to look at this report. What's your initial take on Intel?
Much better than expected, clearly on the revenue side. What's also encouraging is they did a nice job of controlling expenses this quarter and for their forward guidance. So we've gotten up to a decent expense level, and they're continuing to invest in the business and produce much better than expected earnings.
Hey, Doug, it's Julie here. I am curious about this PC client group number. Again, their revenue growing by 22%. It's not what you would expect to see necessarily from a company that's been trying to diversify potentially away from PCs. And also, you know, the market research numbers have been showing that PC numbers have been dwindling to some extent.
Yeah, if we look at it, what I think is really happening, if you notice, they also mentioned that the Intel Atom microprocessor, that is the netbook processing group, was actually down 32%. We're seeing a material mix shift towards higher cost microprocessors, and that's really what's driving the revenue growth. I don't think this is a unit growth story as much as it is a mix story towards more powerful PCs.
So what kind of computers then are we talking about? So it's not going into netbooks, but it's going into higher end computers. But who's buying these higher end computers?
Yeah, it's really for if you think about it, in these emerging markets, as you mentioned, when you're buying your first PC, you're quite often buying something that's a little bit more robust, a little bit more powerful, and able to serve the needs of many. I think when you look in the Western markets where we're buying replacement PCs, I think if you look around and ask your friends and colleagues, are you buying a cheaper, less powerful machine, or are you buying something in that $700, $800, $900 price point that gives you, the performance that you're looking for?
Hey, Doug, Intel trades at about 10 times earnings, certainly cheaper than the S&P 500, cheaper than a lot of tech stocks. Is that because it isn't expanding into mobility? In other words, there are no Intel chips in mobile devices?
Yeah, that's absolutely correct. I think the market is very worried about the company's strategy in ultra-mobile. And when we say ultra-mobile, we're talking about tablets and smartphones. And what we have to remind investors continually is that the dollar TAM available for that market is just a small fraction of what is Intel's able to capture out of the PC market. And that is actually the risk. The risk is that one day we replace our notebooks and our desktops with smartphones. We think that that's a little ways off before that happens.